Good morning, everybody, and Merry Christmas. It's Tuesday, December 24th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Pretty quiet overnight markets here. March corn was up a quarter at 448. March soybeans were up 3 at 978.5. And March Chicago wheat was down 2 at 538.5. No export sales announcements here this morning. We're going to have a short market here today, guys, 12:05 Central. We're going to wrap up for the holiday. Pretty slow trade. We did see a drawdown in open interest overnight in the bean and meal complex. Ben, maybe kick us off with a few thoughts here on Christmas Eve, and then we'll throw it around the room.
Yeah, we were talking before we came on air here, and you're looking at markets that have been, corn has been in a range. Wheat and soybeans have extended a new range lower. Whether or not they can stay there or not remains to be seen. But we have a lot of inputs going into the new year. I think that the grower's going to have to unlock the bin doors. Corn's going to have to flow, generate some capital, appease bankers, and they'll start executing their regular logistics plan. You factor that in with kind of the biggest risk point. I would say the first one is the January report. Corn could get really interesting if they wound up reducing yields. And then obviously the next risk point is everything that can go out between now, then, and after from the incoming administration. So I think January gets to be a pretty interesting month for corn. If we don't get something that's supportive on that final report, I think corn is a little bit vulnerable. It feels like it's lost some momentum here as it's ticked off some pretty significant technical signs of getting above moving averages, but it still has not taken out its high going back in the March, going back to October 2nd. I would look at corn in particular in the next week as there's been a big trade on of buying corn, selling beans. It's been quarterly when you look at where we're at. It started in October 2nd. And do they go and try to give themselves a nice mark for the end of the year? And what do we look at going in next year? Last year, I think some of our best pricing in the whole complex was January 1st. I'm not saying that's going to be the case this year. There's a lot of variables. But it is interesting that corn's holding water, but it really feels like it's lost momentum to get aggressive. So that's kind of my thoughts. I think at some point wheat is going to be a really good trade come late January through mid-March, and we'll see if that happens.
Very good. Dustin, what's on your mind?
Well, I was just going to add to that because I feel like corn, has been giving us a lot of bullish cues here, though. And yes, we haven't taken out those October 2nd highs yet, but 450 is the 200-day moving average now. It's been, slowly coming down, and we haven't settled above the 200-day average, moving average for the March contract since 2023, late 2023. Funds are getting longer. Yeah, they're getting longer corn, shorter beans, and we've seen fairly good basis movement. We're also in that time period where you might not get a lot of selling just because you're going into the holidays, and it might. We've already tested 450 once. We know there's a lot of grower sales around that time frame. We saw basis back off a bit. We saw spreads back off that day. But now if we go test it again, what's there to stop it? There's definitely more corn that wants to move into the first year. But I think there is a chance that things get a little bit spicy in corn just with all the demand we're seeing and the fact that we've already tested it once. A breakout what I think would be at least fairly interesting to see what can happen in corn. So beyond that, there's been a lot of things that I think should have held corn back along the way, and it's been kind of pressing up against taking on that high. So I'm curious to see what happens.
I'm looking at that too and going, okay, it's an impatient, right? Whether or not you've been bullish or bearish for the last couple of months at least, it's been a frustrating trade because it looks like it's going to open up to the downside, then all of a sudden it's going to open up to the upside. And it could be a situation where it's wearing you out. And I do think that we have a lot more things in our corner long-term, meaning that 2 to 3 to 5 to 6 month window versus months 1 through 2, where corn could get really interesting with any underperformance of Safrina or the U.S. crop. So I think it's probably grating on both people's nerves at this point.
Oh yeah, definitely. And not to be a broken record, we keep talking about global corn tightness, global wheat tightness. Brazil's right. We're in the middle of soybean season. We have to still get into corn season to really know where we stand globally. But there should be some weather risk premium, in my opinion, that there is still always that chance that Brazil does not come through with the second season corn crop large enough to satisfy this tightness that's building. And meanwhile, we've got only an inch of rain projected for the next 2 weeks for Argentina's kind of core season here. So it's not like weather's perfect in Argentina, and that's I think that's why a lot of the focus could be on corn still. So
and to be fair, it is in Brazil, right? I mean, we've been solid in Brazil, and you mentioned Argentina, Justin. Maybe a few thoughts. We've had a lot of folks asking just in terms of how meals acted the last couple of sessions. Is some of that attributed to Argentina, or what's your thoughts on that? I guess the complex.
Yeah, you kind of joke about it. The guys that I talk to that trade, it's kind of the playbook, right? Like, look up Argentina drought. Oh, you buy meal. Like, that's just the playbook. So
yeah,
I think that explains a lot of what happened on Friday. And they're record short. So, it's ripe for a rally. Thin markets. I mean, overnight we're moving $2 in meal, 50 points in oil on a couple hundred contracts. So thin holiday markets. You've got funds, pretty long corn, pretty short meal. Some of these inner commodity spreads evening up before the end of the year. We always talk about these thin holiday markets. Anything can happen. Just adding to kind of Ben and Dustin's comments. I think it'll be interesting. I had a lot of conversations over the weekend, actually, with a few clients, farmers, family, just about like corn and bean rotation. And I think it's going to be interesting that the dialogue has been, we're just going to gain a lot more corn acres because we have to. And I think it's going to be really interesting to see. I think it's one thing to say that, and then one thing to go in with your banker, with your budget, with the amount of dollars you need and actually do it, especially on these, what I think is a lot of operations that have gotten into a really good rotation, fertility program, all those kinds of things. So, I think the corn market, has to buy acres, and, the, D's 25 contract has gotten beaten up. It's been kind of the, proverbial, pissing post, I think, of the market during this whole rally. And I think it'll be interesting to see if we get the acres that the market's just penciling down that we already have. And to Dustin's point with the, rolled carryout being so tight, we're already planning on a giant safrina crop and a big U.S. crop next year. And the attitude's been like, well, we can grow 250 bushel corn now, no matter what, in the U.S. So I think we've discounted a few of these commodities, soybean oil being another one. Where it's just like it's bearish just because, and you could put wheat in that camp, honestly. I'd say wheat, corn, and oil has just been, I think we've been just, not paying attention to any of the bigger fundamentals, and the trend has been down. So I get it, but I think that I could see that turning.
Yeah, wheat has not responded to any news story. Like it just is desensitized to moving lately.
Yeah, I mean, it's the trend's down, right? It's making contract lows, so it is what it is. But I do think I think Ben made this point, and Dustin did too. But there's enough friendly things around here that I wouldn't be surprised if we see something turn first of the year. We'll see what the January report says. I mean, if we lose a bushel or two in corn, or there are a few things that could happen there that it's going to make it really tough to be a short down here at multi-year lows.
Yeah, and let's talk a little bit about D's 25 being a pissing post. It has been, and we've seen it not just in, price action, but also on COT data, right? Since September, the other category has basically been, beaten down by managed money funds, so that was the primary, large open interest seller of the back end while they're building a corn long position. So they're literally buying old crop and selling new crop in the process. And, when you go back to, natural rotation says, 2023 acres were really heavy corn. So 2025 acres need to be really heavy corn. I just don't see that on anecdotally, we have some people are planning on corn, but from university data and through a vast majority of the customer base, I think people are going to stick to the rotation. Like you said, they're in a really good fertility program. It's not worth the yield risk unless it's a clear price winner. And now granted, we said this yesterday, if we were to spike above $5 corn prior to the planting window, we're going to probably pick up a ton of corn acres, right? Just that's going to be the mentality, especially coming from this price point, just like we've seen in some of these other years where you get that enthusiasm prior to the end of the planting window. I just don't know that I believe that at a 2.26 to 1 ratio, which does favor corn on any typical year, but not when we're talking about, triple digit losses for corn on corn.
Yeah. And, I think, we've talked about this too, but I think a lot of lenders were kind of behind the ball on how bad the economics are, kind of like, it's good. Everything's good. And I think now that digging into the numbers and seeing the losses materialize, I think it'll be a different conversation with how many dollars they're willing to loan, and maybe add to Ben's point that we might see, first quarter heavy selling in corn just to free up cash flow. So, it's going to be really interesting, I think, first quarter to see how all these things play out.
Yeah, I was sitting last night. I was watching the Idaho Potato Bowl. And it was a great game.
Slow sport night.
Northern Illinois wins.
Yes, they did. Go Dogs.
You're looking at these currency moves. Domestically, we don't have truly burdensome stocks of corn and beans, and we're projecting that we will have out of South America beans, and then if we, like Justin said, assuming that we're going to make these big crops, that's freeing a crop in the U.S. corn crop, kind of taken for granted. But I think that this last currency move, as you get into the position of being a residual supplier, I think it's something that we have to start looking at as well, of the potential of the necessity to have some sort of currency hedges in there. And on one hand, the cynic goes, well, the next time I do it or the next 10 times, it's going to cost me. But, you look at how this has been negative for the U.S. farmer, but really not punitive for the South American farmer. And we don't want to lose that edge to them if there's a way to look at it and kind of get some clarity on what currencies can mean moving forward.
Very good. We got a couple minutes here. We're coming into the open round. We had a hog and pig inventory yesterday along with cold storage. A couple thoughts there, and then we'll put a bow on it for the day.
Yeah, so overall pretty quiet here yesterday, at least on the cattle side of things. Just looks like Packers kind of sitting with inventory, and it's a holiday week, so I don't think anybody's got any big expectations for cash. It's more likely kind of a steady sentiment here. Also, beef prices are just kind of languishing. Choice at right around 316, that was up 13 cents, and Select up 84. And so we're starting to see the funds start to pair their positions a little bit in both places. Open interest was down, 1,200 cars in cattle. So overall, I think everybody's waiting to see what cash does. There wasn't a huge response to the cattle on feed report. So overall, it feels like we're probably going to wait till after the holiday for any kind of real repositioning. On the other hand, hog and pig report came out, and I think it was a little bit bearish. It was kind of a beat across the board from what the market was expecting. I think the supply side of things just kind of paints a picture as a little bit higher. All hogs and pigs were up about 1%. Heifer breeding was pretty steady, and market hogs up 1%. So I think a lot of the focus now is going to be on this front-loaded demand, and if this report is going to be enough to really shake any of those guys out. We've already started seeing a little bit of liquidation into the report, and so now it just kind of feels like looking out forward, we see that these supplies are a little bit bigger, or at least with varying intentions, as we look forward. And pigs per litter coming in a little bit bigger than expected. So overall, it just seems like you got a little bit more of a negative supply situation kind of setting up here with a front-loaded demand. So like I said, it feels like that's going to be the focus, is just, hopefully they don't just trash the thing today, but it's going to be pretty thin trade. They already kind of started to liquidate. So hopefully you priced in a decent chunk of this kind of weakness, but I think this is the big risk right now with the managed money carrying a near record position. And we're starting to see supply data that kind of supports a little bit more of a bearish kind of sentiment.
Very good. Appreciate the update. Just came into the open here. March corn up a half, 448 is the last. March soybeans are up 3 1/4 at 978 3/4, and March Chicago wheat is down 3 3/4 at 536 3/4. Reminder: we will have an early close here today, 12:05 Central. We will be closed tomorrow for Christmas, and we'll have a hard open 8:30 Central on Thursday. So War Room will be back here Thursday morning. We hope everybody has a wonderful Christmas, very safe and happy holidays to all of our folks that tune in. We appreciate everybody that does so on a daily basis. If you wouldn't mind, throw us a like or subscribe. It'll keep you up to speed on everything AgYield. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central. Again, Merry Christmas to everybody. Enjoy the time with your families, and we look forward to talking to you again on Thursday.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.